Welcome to the Course One podcast. In this podcast, we explore the emerging open financial system. We dive into scalability, interoperability, proof-of-stake, blockchains, and many other parts of this coming financial singularity. Tune in every Monday to dive deep into these cutting-edge projects and protocols with Course One team members and guests.
Hello and welcome to the Chorus One podcast. Chorus One run infrastructure for crypto networks. So we're currently running infrastructure for some Cosmos zones, including Kava, Terra, the Cosmos Hub itself, the Loom network. We're also running testnets for Polkadot, Solana, and the Region network. And we'll be introducing more networks over the coming months. Also, we provide software development services for projects. So we're working with a number of those projects, either making contributions to their core code base or tooling around infrastructure tooling for their projects. And we're very much involved with things like community building and media for these projects as well. So we help them build their communities and kind of build their brand and communicate their messaging as well. So if you have a blockchain network and you're looking for a good validator, please don't hesitate to give us a call. If you are a holder of any of these proof of stake tokens, please delegate your tokens to us or contact us again if you'd like to discuss how delegation might work with us. We have we've put a lot of effort into our infrastructure. You know, we've extremely secure key management processes, and we put a lot of work into securing the infrastructure. And it's extremely robust infrastructure with logging and monitoring, alerting, analytics. So yeah, we certainly are one of the leading players in the validator space. So definitely check out our site for more information. So today on the show, we have Kyle Samani from Multicoin. So it's a great pleasure to have Kyle on the show. Kyle is one of the leading fund managers in the crypto space. Multicoin have an amazing portfolio, really impressed by their portfolio. A mix of things like layer 1 and layer 2 networks. So Solana, Scale, Near, but also more of the kind of infrastructure tooling and kind of picks and shovels businesses that go around crypto, things like Tagomi Prime Brokerage, and then developer tooling like the Graph, Textile, and there's Torus that we discuss in the show as well. So definitely check out the Multicoin website. It's multicoin.capital. They have lots of great blog content, research report, and insights. So definitely, if you're interested in crypto, have a look through that. On the show today with Kyle, we cover a lot of ground. We go through a lot of things. So hopefully you enjoy it. You know, we start off talking about decentralized finance and the interplay between exchanges and centralized players and decentralized finance. But we, like I said, we cover a lot of ground and we get into various things around decentralized finance and how that might play out. We cover some of the things about how we might get to mass adoption in the crypto space, challenges around liquidity, how that might be pooled or networked. We talk about things like the interchain and how there may or may not be a future where we have a lot of different blockchains that are interoperating. So yeah, really hope you enjoy the show and do check out our website. It's chorus.one. Thank you. Hi, this is Brendan from Chorus One, and today we're here with Kyle Samani from Multicoin. Hi, Kyle.
Hey, good morning, Brendan.
Great to have you on the show. Thank you for taking the time to talk to us today. So let's dive straight in. You guys at Multicoin, you have this idea that you've got three mega theses, one around open finance, one around Web3, and one around stateless or non-state currencies. Do you want to kind of introduce us to those ideas first, and then we can dive in?
Yeah, let's do that. So just for some context, right, we're an investment firm. We raise capital from limited partners and then invest that capital, in crypto assets in the space. And, one of the things that kind of a lot of investors, if you're not full-time in crypto and you look at the space, you see these open finance things and you see people talking about digital gold and you see all these Web3 things, and it's kind of hard to make sense of it all. And so we, about 6 or 7 months ago, decided to kind of take all of the action happening in crypto and try and kind of synthesize it into one digestible thesis that is something that, someone who's not full-time in crypto could actually understand. So we kind of wrote that down and published that as what we call our crypto mega theses, and that's on our website. And so in the essay, we kind of walk through what each of those theses are. We think each of these opportunities are opportunities that are ultimately going to be measured in trillions of dollars of economic value. And that's why we call them mega. We think these kind of opportunities are just absolutely enormous. although they are going to take a decade or longer to play out. The first of those theses is what we call open finance, or more kind of called DeFi among a lot of folks in the space. I kind of prefer the term open rather than decentralized. And open finance is really is about using smart contracts to enable people to engage in peer-to-peer financial contracts. And that kind of enables trust minimization. It enables just kind of new kinds of ideas. Things like something like Maker, right, where you have an asset and then you just withdraw debt against it. Like that literally did not exist until Maker was around. We think these are some really kind of breakthrough ideas in terms of finance. And we think that this is going to ultimately kind of enable billions of people to access the financial system and be able to engage in more complex contracts as these systems evolve. The second kind of major thesis is about Web3. Web3 is really all about enabling consumers to own their own data as they browse the internet. And this really is also about enabling kind of the next generation of entrepreneurs who are building next generation applications to not have platform risk. Right, like the reason I actually got into crypto was my last startup built software for Google Glass for surgeons, and I understood what platform risk meant in a very real way, because when Google kind of pulled the plug on Glass, my business effectively died overnight. And then the third, kind of non-sovereign money. And so those are, we think, kind of the three huge ideas in crypto, and we really construct our portfolio kind of within those three theses.
Okay. So I guess where I wanted to start is, I think what's really interesting, like your recent blogs or research reports around Binance, right? So you talk about Binance blitzscaling. And in the context of that, I mean, we can see how fast they're moving, right? Whether it's, Binance Labs and Launchpads, over-the-counter, leverage, lending, staking, fiat, derivatives, stable coins, like the guys are just unstoppable. Like, do you not feel that it's going to be really hard for anyone to really compete with the exchanges, or how do you see that playing out?
Yeah, so I think the vision for DeFi I find to be incredibly compelling. What is very hard about DeFi or open finance is just customer acquisition and customer adoption. And when I look at Binance really has a great focus on customer adoption. They have a fantastic marketing and branding machine that really no one else in crypto has. And we kind of realize, like, hey, the Binance team is leveraging their customer base and their liquidity, and they're slowly trying to decentralize themselves. And so what we expect to happen over the next 5 years or so is Binance starts to decentralize itself in bits and pieces. You can see that starting to happen already with Binance Chain. You can see that happening with like the peer-to-peer OTC thing that they just rolled out a couple months ago. They're working on peer-to-peer lending. So we can see them starting to do that, but they're kind of taking this core base of a high-quality user experience centralized product and trying to decentralize themselves. And just given their kind of pace of execution, I think it's going to be very difficult for a lot of people to compete. I'm not saying that no one can compete. I do think there are going to be other opportunities for other players, but to me, it seems pretty clear today that Binance is really kind of the dominant entity in kind of driving most of the ecosystem forward.
Yeah, it makes sense. Related to that, then, you talk about like how exchanges are catalyzing open finance adoption, right? And then you go into potential new services. And again, it looks like if you look at the next set of services, maybe it's regulated securities exchange, maybe it's prediction markets. I think you talk about debit cards, money markets, unsecured lending. Again, it kind of feels like the exchanges are just going to have like such an advantage as these markets expand. Is that the same thing? Do we think that it's going to be really hard for any up and coming players to compete with the exchanges on those new areas?
I mean, again, it depends on how you segment the market. So, if we look at, like, for example, BAC's volumes have been growing nice and steadily over the last, call it month and a half. I think at the super high end institutional end, I think there's going to be a kind of a unique market, and I don't think Binance is likely to compete there. It's a question if Coinbase will compete there, but I don't think Binance will. Or any kind of the major Asian exchanges like Huobi or OK or BitMEX. When we think about, so that I don't think will be a lot of competition. It's unclear, there's a lot of new kind of challenger exchanges out there right now, some of which have gotten kind of off the ground, FTX as an example, CoinFlex as an example. There are a handful of others, and it's unclear if those guys are going to be able to kind of hit escape velocity. We actually spend quite a bit of our time looking at the challenger exchanges, trying to understand kind of their unique avenues on how they can try and kind of get from being alive to really like mega scale. And thus far, we haven't really seen anyone pull it off since Binance and BitMEX. But I like never say never, right? I think there's a lot of opportunities there. I expect to see lots of people kind of continuing to launch challenger exchanges, and all these people have kind of new novel ideas. novel go-to-market distribution strategies. And I think at least one or two of them will, get to a meaningful scale. It seems harder to like displace Binance, but I do think it's possible for them to at least get off the ground to be, a meaningful player.
And what's your take around the possibilities here? Because it feels like we should be able to, given that we have open finance and it's building blocks and there's public APIs and everything else, it feels like we should be able to like network liquidity or pool liquidity in better ways, right? And we kind of see some of this with Uniswap, with Kyber, with 0x Mesh, with Bancor tried to do it. Like there's been lots of attempts to try and connect liquidity pools. Do you see that playing out, or do you just think that's just too big a challenge for anyone to solve?
I mean, I think eventually, I think in the long run, like there is some probability that we end up in kind of some single global liquidity pool. That is definitely very, very far away from happening, just for logistical reasons. I mean, the problem with all of the 0x based things you mentioned, like 0x, Kyber, Uniswap, Bancor, is that they only work for ERC20 tokens. And so they're already losing out, like Bitcoin's not there, Litecoin, Monero, Zcash. There's a lot of assets that just by definition don't work there. Bitcoin obviously being the most important one. And so, that alone is just a major hindrance. I think eventually we will get to the point where we have, cross-exchange, atomic swap, DEX, things that work magically. I don't think we're close to that, being a reality. We can start to see some of the pieces coming together now, but I think before all of that operates in a very smooth way, cross-chain is we got a ways to go. Even once that's available, it's not clear. And like I'm fairly certain there are some segments of the market that demands that or would like that, but it's not clear to me how much of the market that is. So, we'll see how that plays out. It also is not clear that let's say the technology exists to enable cross-chain magical DEX stuff for everything on a global liquidity pool. If the tech is there, it's all open source, then why doesn't Binance just put it in Binance Chain kind of a thing, right? And so there's just a lot of ways this can play out. I do think we will eventually get to the holy grail of having the tech that enables support for that vision, but even just because the tech is there does not mean that we will actually have one mammoth liquidity pool. Just for a simple example, I mean, like KYC and regulation, right? Like there's going to be people who can only trade on backed, and they're just never going to trade on this magical DEX for kind of structural reasons. And so we'll never actually get one liquidity pool, but I do think we could converge from, call it 20 or so major liquidity pools that exist today down to maybe 3 or 4. That seems possible and in fact probable to me.
Yeah, makes sense. So I guess you and your partner Tushar, like you've been like kind of the leaders, like thought leaders in terms of the application of strategic thought to crypto, right? I would say like you guys have driven a lot of the ideas. I know you use ideas from like aggregation theory and different models of bundling and unbundling services to try and analyze what's going on here. How do you see all this playing out in DeFi, where you have you've protocols, you've got aggregators, you've got robo-advisors, you've got Instadap and Argent and Crypto.com and Nuo. Like, how do you pull apart that stack, and who do you think wins in that stack?
Yeah, so we have spent quite a bit of time talking about this internally. I think the kind of the aggregators, so the Instadaps and the Nuos, there's a handful of others in that space. I think they're going to have a really, really tough time in the long run. I don't really see any sort of stickiness or network effects for them. It's very easy for users to switch, and they don't really have structural advantages in terms of like rates and those kinds of things. So I'm pretty skeptical that those guys, at least in their current incarnations, can capture meaningful value. It's possible they could pivot or kind of leverage their customer base and do something novel that we haven't considered. But based on our understanding of their current trajectory, it seems like they're always going to have kind of a lot of structural challenges. We really think the most important thing to think about here is aggregating demand, aggregating users, and then using that to create your own network effects around liquidity. And that's why we're so bullish Binance, because Binance, they have aggregated users, they have aggregated their own closed pool of liquidity, and we expect that they're going to leverage that to kind of slowly decentralize themselves. There's a lot of, it would be nice in an ideal world where there's one magical liquidity pool for everybody. In reality, there's a ton of practical reasons why the system actually does not, why individual participants do not want that to happen. And so I think the force of the venues themselves not wanting to have one magical liquidity pool is likely stronger than the convenience of having one global magical liquidity pool. And so I expect, the people who own demand today and have already aggregated will continue to leverage that to kind of offer decentralized products and services in the future. And people who are just, they're just a user interface layer across other liquidity pools. I don't really see how they're going to be able to maintain meaningful strategic advantages in the long run.
Yeah, so it sounds like what you're saying is it's all about distribution, and Binance have the distribution. Do you see that distribution coming from outside the crypto space, like particularly like the fintech players moving into crypto?
I do. I think there's a lot of really interesting ways to do distribution that are really not intuitive yet. I think once it's been a few years and there's kind of scalable blockchains that work really well and they're magical and the APIs are all documented and there's lots of examples of how to leverage them. Once we're at that state of maturity, I think a whole bunch of really interesting types of companies start to look at crypto and say, hey, how do I experiment with this thing? So just one very simple example is Reddit. There's a lot of pretty obvious ways Reddit could play with crypto. It's not clear to me what would work or what would not work or if it would all fail, but certainly given you have users and karma and voting systems and little economies already kind of right around Reddit, it seems pretty obvious to me they could leverage crypto in some interesting ways. And so, or you look at something like Brave with their BAT, or you look at any of the major messaging applications. And there's this kind of long tail of live streaming applications, things like YouNow and Props and these things. And so I think there's all of these kinds of weird players that have audiences of, call it 1 to 50 million. They're not, Snapchat or Twitter or Facebook scale, but they still have millions of users. And I think a lot of those types of companies over the next few years are going to start to look at crypto and say, hey, I can actually leverage this in some interesting ways and I already have distribution to kind of drive demand. And I think that will happen, but that's still quite some time away. Okay. On the traditional fintech guys, they may. It's not clear to me that Robinhood is going to be able, is Robinhood going to move, equity trading from a broker, from being a prime broker, hooked up to DTCC to some blockchain-based equity thing? It's possible. It doesn't seem very clear to me why that's in Robinhood's best interest or what it really does for them. But I don't fully understand enough about their business to understand kind of the gains that would bring. It's possible, but I think the more interesting avenues for distribution in terms of net new use cases are looking at different types of online communities that are 1 to 50 million users.
Okay, great. Sounds good. So you touched there on kind of then the path to mass adoption of crypto. One of your portfolio companies is Torus, right? Who kind of solved the challenge of key management. Can you talk a little bit about that and maybe just some of the other UX challenges you see with mass adoption?
Yeah, I mean, broadly speaking, we think of kind of the usability challenge. It's 3 major pieces of the stack. This is certainly a broad generalization. There's lots of teams working on smaller components here, so I don't mean to diminish the importance of their work, but we really kind of think of 3 major layers to the usability stack. The first is just straight up scalability, throughput, performance, and fees on the base layer chain. And there's obviously tons and tons of smart people working on that today. The second kind of major UX layer we think is super important is the fiat to crypto bridge. And again, a lot of smart people working on that. Some notable examples are Wire, MoonPay, and Ramp Network, and there are a handful of others as well. And then the third is key management. And I think key management is somewhat neglected, relatively speaking, by the crypto community. In the last 6 months, we've really seen kind of a blossoming of people experimenting with smart contract wallets, with gasless transactions, and these kinds of things. Most of the innovation happening there is really focused around kind of logical permissions around the kind of smart contract, and then kind of weird account recovery solutions with backup keys and those kinds of things. I really find the user experience there are pretty unintuitive. We invested in Torus because Torus really, we thought, presented by far the most compelling user experience in terms of onboarding net new users to crypto. So the way Torus works is there are a handful of nodes. I think there's 9 nodes today, but this number will increase over time. It'll become 15 and then 30 and 50. And these nodes do a distributed key generation. And so the keys exist sharded across all the nodes, but the key never actually exists, in one place at one time. And then whenever a user wants to actually kind of, basically be assigned a key from the Torus network, they use an OAuth provider to do that. And so you can use Google or Facebook or Reddit or Telegram, or there's a bunch of them now. And the idea is that when you want to basically get a private key, you just hit login with Google or login with Facebook. That OAuth provider basically sends a token, some sort of OAuth token to the network of Torus nodes The Torus nodes know that that token belongs to you, and then they can kind of retrieve their, the right key, and then ultimately they can do some distributed signing and some other kinds of things to actually, produce a signature on a transaction. The beauty of this system is that the user experience is quite literally indistinguishable from a Web 2 experience. You just hit sign up with Google or log in with Facebook, and like that's it. There's no notion of a private key. There's no notion of account recovery. There's no notion of setting up social guardians, hardware wallets. It is indistinguishable from a Web 2 experience. And we find that, right, like these companies, Google and Facebook and Apple and all these guys have spent, the last 20 years, training people like that's the way you onboard to new applications. And now billions of people have been trained on that kind of user experience flow. And we find that Torus being able to leverage that is just an incredibly compelling way to onboard 1 billion people into crypto. The kind of downside of the Torus model is that it's not entirely self-sovereign, and that like Google could theoretically, take that OAuth token and abuse it. What we expect to happen over time is a few things. One is we don't expect people to treat their Torus private key as the place where they store their entire net worth. Torus is more like kind of a first wallet or a first UX onboarding thing. Second is you can kind of start to combine Torus with other systems and other smart contract wallets to produce kind of higher levels of security. And so we could see that happen where you could have a Facebook and a Google and a Reddit login to move more than 10 Bitcoin or whatever. Like those are kinds of things that are certainly possible, and I think will become configurable over time. And then the kind of the other downside of Torus is just there's this network of nodes. Today it is permissioned. There's I think 9 nodes that are run by Consensus and Binance and Coinbase and Block One, and I forget who else runs them. But again, that number is growing over time. The way we think about Torus in terms of kind of the value proposition for users is one, an absolutely seamless onboarding experience, and two, it's one that really doesn't introduce new trust assumptions, right? People already trust Google and Facebook, and so you can kind of leverage that trust to just kind of have a clever way to get key management solved. And we think that's really like we think it's just one of those interesting solutions to the problem at hand.
Sounds really cool. So is that available today, or how is that going to work as Web3 evolves? Like, is it Ethereum based?
Torus is live today. Absolutely. Yeah, it's live today. It's integrated with over 100 applications in the Ethereum blockchain. The Torus team is working with side chains and roll up chains. They're working with other new chains as well. Yeah, Torus is live today. You can use it, and it will work across many blockchains.
Okay, excellent. So just while we're on the portfolio companies, let's jump into Solana, because I think that's obviously a project that's very close to Chorus has been very, very much involved with it from the start, and we've been running helping the guys get the network launched there. Do you want to just kind of introduce Solana, how you see it? Like, what was your thesis? What was the rationale behind the investment?
Yeah, so Solana is a new layer 1 smart contract chain. There's kind of a few key things in Solana. We've written an essay on our website about kind of the major technical innovations in Solana, but I'm just going to highlight what I think is the most important, which is the notion of time. If you look at kind of how traditional distributed systems scale, if you're Google or Facebook, whatever, you've got dozens of data centers all over the world, and you need to keep these things all synchronized. The way you fundamentally solve this problem is you have a trusted source of time. And then the idea is that every transaction, that comes into the system is timestamped. And so even if transactions arrive out of order across different databases, they can all ultimately be synchronized into one coherent ordering, because you have a trusted source of time. And as long as everything is timestamped, then it doesn't matter like when those transactions actually arrive to each data center. You just sort everything by the timestamp, right? And this is like widely understood as like the way to solve the problem. It's a very intuitive solution to the problem. And we have empirical evidence that this will scale to effectively infinite throughput. The problem in blockchains, in distributed systems, is that you don't have a trusted source of time. Like, that is kind of the problem, right? And in the original Bitcoin white paper, right, Satoshi actually referred to it as a time chain, not as a blockchain, because he fundamentally understood that the problem here was agreeing to having a source of time. You in Bitcoin, you can basically think that the clock in Bitcoin ticks, on average every 10 minutes. In Ethereum, the clock, so to speak, ticks one step forward every 15 seconds or 13 seconds on average. And so, and in all of the major blockchains today, with the exception of Solana, these systems fundamentally do not have the notion of time making any progress until the nodes actually go through the consensus process and agree on some new state transition and state update. And so Solana kind of fundamentally approached the problem in a unique way. And they basically leverage, they came up with a clever solution where you can have a trusted source of time that all the nodes in the network agree on, in still a Byzantine permissionless public environment, and then leverage that to really drive performance. Basically, it changes kind of all of the assumptions up the stack in terms of nonces, in terms of transaction timing, in terms of data propagation. It really, once you have a trusted source of time, it changes how you kind of think about a lot of upstream, or downstream implications. The kind of way the Solana system works is, let's just say you have 100 nodes, and let's just say the nodes are going to rotate, let's say block times on average, let's say every second. The way the system works is you've got the first node that's going. It's just kind of a round robin system. That node is running a local VDF, just kind of hashing, doing a SHA-256 hash over some input. And then every, let's say, 1,000 hashes or 1,000,000 hashes, everyone in the network understands that after 1,000,000 hashes, the system rotates the leader to the next person. And the idea is that if the last person doesn't propagate their block in time, then everyone just says, okay, well, too bad, that guy just didn't show up, and now we're all listening, for messages from the next guy. And so the way what's really cool about the system is that the system continues to make progress in terms of leader rotations and leader elections without anyone actually having to agree on any messages. This is a pretty profound concept, right? Where you can say, look, we can all agree on the leader rotations for the next X number of blocks. They kind of define that in epochs, but we all agree on the leader rotations for that. And then for the rest of this epoch, we don't actually have to communicate with each other whatsoever to understand that that's kind of the order and the timing of the leader elections. And all of this is done because every node in the system is independently maintaining their own clock by running these hashes. And so long as people, don't hear from the person that they're expecting to at the time they're expecting to hear from them, then everyone just kind of moves on to the next person. And then on top of that, they're just a BFT consensus that prioritizes liveness over safety, and it kind of iterates from there. But that's really kind of the fundamental breakthrough in design that the Solana team came up with, is that, look, you really need to have a granular notion of time. And so in Solana, I think block times are on average 400 milliseconds. I don't know how many hashes that represents, but let's say it represents a million hashes, represents 400 milliseconds, right? That means in Solana, for every block, you actually have 1,000,000 ticks in the clock, so to speak. Whereas in literally every other blockchain, you get one tick of the clock every block, which, for it seems like most of the next generation systems is, call it 1 to 6 seconds, right? And so Solana gives you much more fine-grained notions of time. And that changes how you think about transaction ordering. It changes how you think about data propagation. It changes kind of a lot of assumptions up the stack. And that was really the core of our investment thesis in Solana, and why we're so excited about what they're working on.
Yeah, so the output of all that is you get like a really, really fast blockchain, right? I guess they have a lot of innovations built on top of that, right? In terms of how they execute smart contracts on GPUs and things like that, right? There's a lot of optimization that goes on top of that to make it really fast. But so you have a really fast chain, and that means you have potentially like very, very low transaction fees. So how does that fit in then to your, like the other kind of blog you wrote about how there's this kind of unbundling of Ethereum going on at the moment, right? So ICOs are moving to Binance chain, and enterprise apps are moving to Cadena and JP Morgan chain, and games are moving to Tron. What moves to Solana? Like what do you see as the big use cases for Solana?
Yeah, so I think the things that are the people who are likely to move to Solana in the near term are people who literally have no other choice, and I mean that in the best and the worst way possible. So, for example, if you are, let's say, Props or Kin or Reddit or Brave today, you've got millions of users using your system, and you want to enable some crypto thing. Like, what do you do? And right, so Brave is actually kind of the best example here. The Brave team realizes the vision. They would love to have peer-to-peer payments in this browser and this wallet and all these magical things, but like Ethereum would fall over. I mean, Brave has 9 million users right now. It's going to probably be at 20 million users a year from now. There's absolutely no chance that Ethereum could support that. It even seems pretty unlikely to me that most of the Cosmos Tendermint chains could support that. And so for folks who have a large base of users and who are thinking about kind of enabling crypto and they want true peer-to-peer payments, we think those are the types of companies or teams that are most likely to move to Solana, because Solana offers them something that truly they can't get anywhere else. I can say with a pretty high degree of confidence that Solana is going to be far, far, far and away the most performant chain out there in terms of latency, in terms of aggregate throughput, and in terms of transaction fees. And I think those are kind of features and functions that quite a few people want. And those people are, I think over the next few years, going to really self-select and realize, hey, this Solana thing really does provide that for me. I don't have to worry about sharding or atomicity or asynchronous comms between shards or all these different types of wallets. It's just, I have a database, it sits in the sky, it's BFT, and I read and write from it as effectively at any speed that I want to, right? And having just that level of simplicity of abstraction, we think is incredibly compelling for people who already have millions of users who want to enable crypto components. The way Brave solved this problem, right, was they just went to Uphold. They realized, look, we have to just kind of have a centralized ledger and let people have the chance to withdraw if they want to, but we realized 99% of our users won't do that. And then the Brave from there realized, well, actually, if we do that as ourselves, as Brave Inc., that makes us a money transmitter. And, they didn't want to do that. And so they just partnered with Uphold, and Uphold, deals with that kind of legal complexity. But, folks like Brave would really love it if they could just have an open distributed ledger that, magically solves these problems where they don't have to rely on a centralized party like Uphold.
Mm-hmm. Okay, that makes sense. So we're just going to wrap up with one last subject. And this subject, I think, is particularly interesting for us because this is probably the one subject where I guess Multicoin and Chorus diverge, right? Up to now, everything you said, we completely agree with. And I think your analysis and your strategic analysis of all the projects is absolutely spot on. Whereas the Cosmos thesis we're obviously big supporters. The Chorus thesis, we're obviously big supporters of Cosmos and the Cosmos vision for interoperating chains. But I guess your concern is that model is just not going to be viable, and I'm guessing that's because you just can't see a way that these self-sovereign chains can get enough security to support themselves. Is that your only objection, or do you have other objections to this kind of interchain vision?
Yeah, so I have a few kind of challenges with this vision of having 1,000 blockchains that all magically talk to each other. I think the first is just again, if we come back to like Ethereum, right? I mean, Ethereum was kind of the breakthrough for all of the stuff. And if you go watch Vitalik's original keynote from January 2014 and in Miami when he unveiled Ethereum, it's about a 20-minute presentation. It's pretty high level, and I find it incredibly instructive. And he walks through kind of the history of crypto up to that point, and he says, "Look, we have Bitcoin, and now we have these interesting ideas, things like Namecoin and OneCoin, and other people who understood the power of having kind of open decentralized systems, but each of them, had to re-deal with solving all of these kind of low-level problems around consensus and, basically the network layer and smart contracts and logic and, virtual machines and these things. And obviously, Vitalik said, look, I think we can abstract all of that generically, and then people can just write, smart contracts and then not worry about any of these kind of lower-level problems. And that was the key insight, right, that made Ethereum. And what's kind of happened since then is a whole bunch of people have said, wow, having open decentralized systems is very powerful and compelling. There's a lot of ideas we can do with this. And then everyone kind of quickly ran into the problem of throughput and latency and transaction costs on Ethereum, the EVM and all kinds of kind of things that have become very obvious shortcomings, right? Since then, although the kind of the core premise of what Ethereum, was supposed to enable was clear, the kind of practical implementation clearly was not going to get us to the end state. And so since then, everyone's been racking their brain around how do we scale these systems. And, one kind of proposed solution has been, look, why don't we just have lots and lots of chains and make it really easy for them to talk to each other? And while I kind of get, why people have come to that conclusion as one path forward, I don't like this for a number of reasons. One, by definition, all the smaller chains have less security. Two, it really adds a lot of overhead to the developers in terms of launching a new application. You need to, make sure the validator, you have to find a validator community, do all that work, test with them, upgrade it, for the validators themselves. Now managing hundreds of little chains becomes a lot of work and overhead. It's not clear the economics of having a small chain, if that's actually going to work in the long term. I mean, how much income do you actually need to generate to keep a chain secure? IBC itself introduces new costs, right? If you have if you want to communicate between chains, you're going to have to pay that, the Atom chain holders something, and that's going to create additional costs in the system and latency. And so you just kind of create all of these new forms of complexity when you go to this kind of multi-chain world. And our sense is that fundamentally, all performance in these systems is constrained by Moore's law in terms of computation and in terms of bandwidth. And that we generally speaking, betting against Moore's law, we think is a pretty bad idea. And looking at Solana really being a great example of saying, look, we can understand, down to the silicon, how to eke out every inch of performance on these systems, make sure that software does not get in the way of hardware, and then just let Moore's law do its thing, and kind of let the market determine what amount of performance is necessary for each of the validators. Whether that's $1,000 box or a $10,000 box, is unclear. But I expect that just kind of simplicity of vision in terms of abstracting all of the underlying complexity is ultimately what's going to produce the kind of winning platform in the long run. And I don't really think you're getting many benefits. Assuming everything I said is possible and comes true, then why would you deal with all the complexity of having 1,000 little chains?
Yeah. And what about so in Polkadot, you've got shared security, right? So Parachain can essentially just pay for security. If there was a shared security model in the Cosmos ecosystem, do you think does that solve most of the problem, or you just think this kind of the usability issues and the complexity issues are still remain and are too big a challenge to overcome?
Yeah. So, that's really one possible way the world plays out, where you do kind of have some sort of shared security pool. Polkadot, obviously, that's kind of the core mantra, what they say. There's people talking about shared security models kind of on top of the Cosmos Foundation. I like that more, but I still, again, struggle with it in the sense of well, look, if you can scale a single chain, then why bother with having many chains, right? Many chains, by definition, increases complexity. And it increases complexity in a lot of ways for wallets, for exchanges, all kinds of infrastructure providers, validators, right? You market makers, arbitrageurs across all these systems, message passing, costs, latency. Right, going to the world of many chains, just by definition, you're increasing the structural complexity of everything on top of that by really an order of magnitude, if not 2 orders of magnitude. So my sense is that over the next few years, the world is going to come to the realization that, hey, what really is nice is having a single shelling point, a single logically centralized, but architecturally and politically decentralized system that can actually just handle all of this. And so if you have that option, then why bother? I think the idea of having shared security also is again, it's not very clear to me what benefit that provides in terms of kind of execution layers, right? So Polkadot, for example, says look, build your own blockchain. Well, again, coming back to Vitalik's original thesis for Ethereum, no one wants to build their own blockchain. They want to write application logic and have everything else kind of abstracted away for them. And so, the idea of well, everyone's going to experiment with consensus models and different virtual machines, I just think that that's kind of, while we need that experimentation to happen today, I expect over the next 2 to 5 years, the market is going to basically settle on what is the optimal consensus protocol, all things considered, and then what's kind of the optimal execution layer. And I think, 10 years from now, it's going to be silly for people to be oh yeah, I'm writing a new VM for smart contract execution. How many times are people building new operating systems, right? It's just those kinds of things. There's a lot of, for 30 years now of how to build secure virtual machines and how to execute arbitrary code. These are problems that computer scientists have been dealing with for the last 30 or 40 years. They're very, very well understood. And I don't see why 10 years from now, we're going to be challenging any of those assumptions in any meaningful way. And so I expect that the market's going to kind of settle on consensus and execution in the next few years. And then you don't need to enable experimentation and support. It just becomes, again, it just increases complexity for really very little, if any, marginal gain.
Okay, that's great. Well, look, unfortunately, we run out of time. There's so many projects in your portfolio. You do have an amazing portfolio. We wanted to talk about Near, we wanted to talk about Helium, Textile, but completely out of time. But maybe another time. But thank you so much for your time today. That was really great. And best of luck with everything. And thanks again.
Hey, Brendan, thank you so much for having me on. This was a blast. Appreciate it. And we'll be in touch.
Thank you for listening to the Chorus One podcast. Visit chorus.one for more information about our work. Don't forget to subscribe to the podcast to stay tuned on new episodes airing every Monday.